Let's get to our weekly options alert now with Alan Uckman of Agora Financial. Here taking a look at the markets, and what's your trader talk for today, Alan?
Called it a comeback. Now, we talked about the reflation, not the worries about inflation, and look what happened. The markets came storming back last week.
Let's track some of your trades. I want to start with Bristol Myers. You did
near break even. It was near break even. It's somewhat upsetting. We got out on Wednesday.
A little too soon, perhaps?
And it went up $3 the next day. So some people that didn't listen to me, they got out the next day, had a nice healthy profit, but I have no problem breaking even on a trade and look to new opportunities.
It's better than a loss. So
exactly.
How's it going with your other trades?
BAC, Bank of America, had a nice move last week, got very close, this close to making new highs. We sold half our position for a 55% profit. It's a March 2nd option, so we still have some time. And if BAC can get to that 32.50 level, then it's looking like $35. We still got 10 days of time.
I believe you still have Twitter on the table as well. Is that correct?
Twitter is doing well. It's a 24 call that goes off the board on Friday. It's $9 in the money. We sold half of it for a 235% profit.
Wow.
Still looking for more. I thought it was going to make new highs at 35 last week. Not quite, so we'll see what happens the next couple days.
Greed is good.
Yes.
So let's take a look at your new trade. You have a WPI trade trigger, and it's pointing towards, once again, a tech stock here, Intel.
Yeah, Intel. Insiders are paying attention to Intel. We're looking at the 44 call, the March 16th. Now, I bought extra time. Now, this is an illustration here of the positions we're in, that we're able to ride through some of the ups and downs because we have options, the power of options. So we bought some extra time because of the holiday, because there is potential for another bit of a pullback, not a correction, but a bit of a pullback after the big surge last week. So Intel's been trading largely between 44 and 46 since October. It's come back to that support level. If it can get back up and break out, we're looking at 48, then 50, but we have 3 weeks of time for good things to happen.
And then getting to your trading floor takeaway, starting with classic comeback.
Yeah, that was an amazing run last week. The S&P was up 4%, Dow up 4%, the best week since 2016, and tech was up 5%, the best week since 2014. So it is a big comeback, like we talked about before. It looked like profit taking unwinding, and I think last week proves that.
Another takeaway, whack-a-mole.
Yeah, every time the VIX pops up, whack back down. And that's another example. It got up to 50 just a couple weeks ago, 2 Tuesdays ago. It's 60% off that high in 2 weeks. And also importantly, when you focus on the S&P on Friday closed above the 2705 midpoint of that stock drop, which is very important. Technically, that sets up for another swing for new all-time highs.
And then last on your list, an 18% target.
Yeah, I'm using my basic measured move target technique, the length of the sell-off, on top of the old highs. A full V recovery targets 32.25 in the S&P, which is still another 18% above. That's happened every time in history until it doesn't.
Until there's another whack-a-mole. Thanks for coming on the show, Alan.